Welcome back. Ayodeji, the Managing Director at Afrinvest Securities Limited, is still with me here, and we're looking at Nigeria's investment and policy direction. You know, there are so many things to talk about, but let's see if we can we can finish them in one show. If you take a look at Nigeria's debt burden, for example, when I was looking at it, what also came to my mind are the implications for investment as well as for growth. Because I think our debt servicing to GDP, no, our debt servicing to revenue is about 60%,
yes,
which is high, you know. And since government wants to do everything by itself, as it were, because that was actually also what you said before the break, what is the implication of our debt burden on growth as well as investment? Because investment definitely will also stimulate growth. Yeah.
Yes, I think the government is, though we also have to also look at what has been happening in the past in terms of investments in infrastructure or structuring debt to finance infrastructure. We've seen more in the last 4 years, like the Sukuk bond.
Sukuk bond, yes.
The infrastructure bonds have been tied to specific projects that can be traced. So it's pathetic that in the what we've had before, it's a lot of borrowings to finance recurrent expenditure. So looking at debt to revenue, currently about 70%, it means that it reduces government's ability to venture on more developmental programs. I love the analogy the IMF used in their report, that is like a family working, and out of they earn 100,000 naira. Out of that 100,000 naira monthly, they are using about 69,000 naira to pay interest, not even the principal, servicing, because that's the main way. We're not even talking about the principal. So debt servicing, that's, you are just paying the interest, except on some of those debts that if you have agreed to pay principal and interest. So there's no way we can make any
to pay
to 69,000 to pay the interest. So
that's
when do you begin to pay the loan? So it's like kicking the can down the road. We are postponing the doomsday. I feel that it is not sustainable. What we can do in the medium to long term is to see how we can increase the collaboration with private investments. Yes, we've been seeing there's a lot of talk around collaboration with private investments in terms of PPP arrangement, but there needs to be, we've not been seeing in terms of reality projects that there've been a lot of partnership. That calls for concern, so it will require a lot of roadshow. We also need the president also to, in terms of the body language, to be receptive to private investment.
So he should be like the chief marketing officer of Nigeria.
That's exactly.
As long as he's the CEO of Nigeria, but he should also have the body language of the chief marketing officer. Go get money, just like Cyril Ramaphosa or South Africa.
Exactly. You hit the nail on the head. We need to see that also the number one man also favors private investments, because even the masses, in terms of that we're trying to see how we want to protect, we need private investors to come in. You look at the rural area, they can rural electrification, looking at maybe it's solar power project that they want to look we have private investors that want to implement in some of those areas, which will increase in terms of reduce their burden and increase in terms of their business activity in those areas. They don't consume a lot of light, so you can have different project, mini grid, that would supply them electricity. But the private guys would be the one to invest in this, and they have to be comfortable even before they want to access it. Yes, we have few electricity power projects around the rural areas, but I feel when you look at consider the population of Nigerians, consider those that are in the rural areas. We're just scratching the surface when you consider those projects. So that it's very critical that the fiscal guys continue, especially the number one man, have that posture that they are willing to work with private investors.
Now, the question will be, do we have adequate, I'm talking of domestically now, do we have adequate or do we have a number of private participants or private investors? Do we have private sector that is strong, that can partner with government to do these big ticket projects, apart from Dangote?
Yes, they can form like a consortium. So if we're not looking at the route of going through the route of Dangote, but we can see private investors that may form a consortium, but they are not willing to take the risk. Once they see, currently they see government involved in a project, that risk element increases. So in terms of your return on equity that they will demand for that particular project would increase. Because if they look at other past projects that government has been involved, how successful has it been? So those are some of those things that would constrain in terms of private investors coming together to invest. Yes, we're seeing some of the domestic guys trying to set up manufacturing companies, but we also know the structural bottleneck, because they have to provide their power, they have to provide their access to deliver their goods. But even it's telling on them. So by the time you also consider the margin, at the end of the day, it's really not worth taking that risk. So it's all about government is continue to preach that they need private investment, continue to emphasize it, and we were hoping that within this next 4 years, at least the first 1 year, if we see that body language that they really mean business, the foreign guys, they see that they are doing everything possible, have more road shows with them, have more meetings with them, understand their fears, and try to tighten all those loopholes in terms of agreements that they have raised, then we will be able to attract foreign direct investment. If you look back when we had the issue of FX, before the creation of the setup of the investors and exporters window, now CBN is almost like a net buyer, because they created a platform. That is what we should look at. Then we're trying to manage. But now that they saw the platform, the CBN is less bothered in terms of defending the Naira. So that is what I feel, that if we create that right atmosphere, and we would attract us a lot of investment that would have to even see how we want to scale it down, that simultaneously different projects will be going on across. They won't bring in all their workers from abroad. It will create a lot of employment. So imagine a lot of these projects attract like 100,000 workers. Those 100,000 workers, they will hit more daily. So it means that all those that will come to their site to sell food, so they will buy more from the market. So you look at the multiplier, it creates direct job, the multiplier effect. They buy more food, then he goes to the market, the demand is higher, informs the manufacturer that now, before I buy only 1 bag per month, now I need to buy 10 bags. The farmers too also knows that there's already a demand. That is how the economy can run. And if all these things are implemented, 4-5% is not impossible in terms of our growth level, such that once they see that landmark, and they see that achievement, we would be like the most sought after nation, that most of the foreign investors, because they can see the market. The only thing is that the risk element that they consider in terms of our policy inconsistency and the enforcement of contracts, for most of them, they try to stay away.
You know, you said, you mentioned earlier, and you just said it right now, in terms of if we need to even attract these foreign guys. A friend of mine traveled to Ghana, and he was telling me last week, he said that when he went to Ghana, he just came back from Ghana, at the hotel, you know, taking breakfast in the morning. And, you know, people lodged in the hotel will come out to take breakfast in the morning. And when he came out to take breakfast in the morning, there were a lot of foreigners taking breakfast with him. So he was asking the hotel people, he said, are you people having an event here later today? They told him, no, we're not having an event. So these people just came like that. He said that they've been coming, and we just got talking. They've been coming, why? Perhaps, I'm talking of Ghana, because Ghana seems to be doing something right now, that foreign investors are just trooping. Moreover, Ghana right now is the largest recipient of FDI in West Africa. Out of about $40 billion in Africa, Ghana is getting the highest in West Africa. You just mentioned Nigeria, $2.2 billion, and that fell by 36% last year. So we should be doing a lot of things right now. Just like you mentioned, it's an emergency case, isn't it? But you mentioned the Naira, and something came to my mind that I should ask you. What do you think is the investment outlook for the Naira? Bearing in mind that investment would also affect our Naira, isn't it? It will affect our Naira because if you take a look at the Naira last year, we had some kind of poor sentiments. EM assets, emerging market assets, we knew what happened last year, Turkey and all of that. Global economic concerns also are there. Monetary policy hawkish stance, though we're seeing an accommodative stance right now, but it's still on the high side in terms of interest rate. So moving forward, what's your call on the Naira?
No, I feel based on our view, with the reserves, based on the current levels now, we are taught that the pressure that we were expecting to see before the election, I think that was, the CBN was able to manage that. So I think for this year, for us, we don't anticipate any major devaluation as long as there's no pressure in terms of capital flow reversals. So if we're able to continue to create this right environment, yes, for FPIs, we would, in terms of its impact, it's just hot money. They just come in
and go.
And carry trade and just take advantage of the interest rate environment and go. We won't get as much impact. However, in terms of creating liquidity for FX, it helps in that because Nigeria is an import-dependent economy. So we can't do away with that. So we feel that the Naira for this year may be stable. In terms of we would need to know if the government, they will be renewing the time of the current CBN governor, or there will be a new CBN governor. Those are some of those things that may inform in terms of the projection of the Naira, because the stance, the belief may be different based on the current exchange rate management that is currently practiced. That may change if a new governor comes in. So those are some of those things that may inform the projection. But in terms of our expectation for the year, we feel that at the current levels, the CBN, if there's no major shock in terms of pulling out of foreign investment, then the Naira may just hover around these levels. It's the official rate that we feel that there needs to be an adjustment to reflect what we are getting, what the current rate at the high and E window. Because we don't, in terms of the number of or the value of transaction happening at this 306 Naira to $1 level, it's very minute compared to the volume of transaction happening at the 360 Naira to $1 level. And when you look at that, also comparing it to the parallel market, you see that there's no difference. So even for some investors, they are not bothered. If they can't access the high and E, you can access the parallel market.
In one sentence, outlook for equities this year moving forward, because first quarter is gone. Outlook for equities, one sentence, because we've got to go.
Yes, cautious optimism.
Cautious optimism. All right. I think we'll leave it at that. Deji, thank you for coming on the show today.
Thanks for having me.
All right. I've been speaking with Ayodeji, who is the Managing Director